Is a huge Bitcoin price crash coming? Experts weigh in on the current market conditions, potential recession, and the future of crypto. Don't miss this analysis. In the latest video from Altcoin Daily, the hosts discuss the possibility of a recession and its impact on Bitcoin. BlackRock CEO Larry Fink predicts a deep recession, while CNBC's Joe Kernan criticizes Trump's trade policies. Despite Bitcoin forming a death cross and hitting a low of $74,000, the hosts remain bullish, suggesting a potential drop to $65,000 before a recovery. They believe that long-term holding will be rewarding, referencing Michael Saylor's view on volatility as a gift for patient investors. They highlight Bitwise CIO Matt Hogan's prediction that governments will increase their Bitcoin holdings, potentially doubling the number of countries owning it. Hogan dismisses Arthur Hayes' skepticism about government Bitcoin adoption. He suggests that even a small percentage allocation by governments could significantly impact Bitcoin's price due to its limited supply. The video concludes with a clip from 2018 when Bitcoin was $6,500 and Ethereum was $230, emphasizing the potential for future growth despite current market conditions. While the current economic climate and Bitcoin's recent price action may seem concerning, the long-term outlook presented in the video has merit. BlackRock's recession prediction adds to growing concerns about the global economy, and Trump's trade policies continue to be a subject of debate. However, the perspective on volatility as an opportunity for long-term investors aligns with the historical performance of Bitcoin. Increased institutional and governmental interest in Bitcoin, despite some skepticism, could be a powerful catalyst for future price appreciation. While a drop to $65,000 is possible, the limited supply and growing demand could drive the price significantly higher in the long run. It's important to remember that past performance isn't indicative of future results, and investing in Bitcoin carries inherent risks. In the latest video from CryptoRover, Bitcoin and the S&P 500 are crashing amidst a global economic meltdown. Markets worldwide are plummeting, with the Nasdaq futures down 5.4% and Asian markets down significantly more. Trump's tariffs are causing recession fears to spike even higher than in 2008. Bitcoin is following the stock market down, but holding up slightly better. CryptoRover suggests that either a postponement of tariffs or an emergency interest rate cut could save the markets. A CME gap on Bitcoin sits at $83,000, presenting a potential upside. Despite the crash, Bitcoin's hash rate is increasing. Ethereum is also at bear market levels, nearing the $1,500 support level. CryptoRover emphasizes that extreme fear in the market, like we're seeing now, is historically a good time to buy, echoing Warren Buffett's wisdom. While the current market downturn is concerning, I believe it presents a unique buying opportunity. The correlation between Bitcoin and the traditional stock market is evident, highlighting Bitcoin's sensitivity to macroeconomic factors. However, the increasing hash rate suggests underlying strength in the Bitcoin network. Trump's policies are a significant source of uncertainty, but history suggests that markets often rebound strongly after periods of extreme fear. While caution is warranted, I'm optimistic about the long-term prospects of both Bitcoin and the stock market, especially for long-term investors. I would advise anyone to do their research and consider the potential risks before making investment decisions, as the situation remains volatile. In the latest video from Lark, he discusses the rising credit spreads, indicating a potential credit crisis. He explains how Treasury bonds are viewed as safer than corporate bonds during economic downturns, leading investors to move their money into Treasuries, pushing down Treasury yields while corporate bond yields rise due to increased risk. Lark points out that this situation impacts the broader economy, potentially leading to job losses and reduced consumer spending. However, he suggests this could benefit Bitcoin due to its inverse correlation with the dollar and its growing recognition as a digital gold and reserve asset. He mentions Bitcoin's resilience compared to the S&P 500's recent drop. Though a credit crisis might negatively impact Bitcoin initially, he believes it will ultimately benefit from the resulting monetary uncertainty and easing. Lark references macro analyst Adam Kabsey's assessment of the current risk levels and economist Alex Kruger's warning about tariff tensions. Lark makes a compelling case for Bitcoin's potential to benefit from a credit crisis. While the immediate future might be rocky for all assets, including Bitcoin, the long-term implications are interesting. A move towards Bitcoin as a safe haven asset could indeed accelerate its adoption. However, it's crucial to remember that Bitcoin's correlation with traditional markets has increased over time, so a severe crisis could still impact its price. Additionally, regulations and government intervention could play a significant role in shaping Bitcoin's future during such an event. The current economic climate warrants a cautious approach, and investors should diversify and conduct their own research before making any decisions.